I'd raised billions of dollars for people, but I'd never bought a bond myself. There are only two factors that matter: usefulness and ease of use. But as we come into financial services, trust starts to play a role. So not everyone gets the same price in the bond market.
Joining me back in Singapore is Rahul Banerjee. Rahul is the founder and CEO of Bondblox.
What we do is we allow both individuals and institutions to trade on our platform. We never take principal risk, so an order from an individual, Arjun, like yourself, will match or can match against any other individual or against a large financial institution. And this, in technical terms, is called an all-to-all trading model.
Mm-hmm. What sort of new opportunities do you see emerging? What's going to be the heavily disruptive stuff just beyond just technology?
The reason I'm struggling is because I want to say two different things. You again asked me two questions, Arjun, right? Next time, please, one at a time.
So welcome back to today's episode of Couchonomics with Arjun. We're back to, I guess, normal service after a 2-week break, which we took because of the mega events which were taking place in Riyadh and in Mumbai. Joining me, unfortunately not on the couch in the studio, but I guess either on a chair or a couch back in Singapore, is Rahul Banerjee. Rahul is the founder and CEO of Bondblox. And we'll get into Bondblox a little bit more later. But I wanted to invite Rahul to the show and thank him for coming. Just for information, Rahul and I don't really know each other that well. We shared the stage earlier in the year in Tokyo, where we talked about topics he knew a lot about and I knew very little about. But that was a great start to, I guess, any conversation, right? Because part of Couchonomics is to actually bring, new thoughts, new ideas to it. So enough from me. Rahul, welcome to the show.
Hey, Arjun, thank you very much for having me on the show. It was great fun in Tokyo, and I wish I was with you in Dubai. But it's F1 weekend. It's the Fed rate cut weekend, and I'm excited as you are to be talking to you.
Yeah, and that's true. It's actually had a big week, right? And you have Token 2049 going
That's
on
right.
in Singapore
That's
too.
right.
That's an interesting event too. Rahul, let's start with the listeners in the view, right? My assumption is a lot of people like me might not be as familiar with the basics of bond trading, right? Can we start with that? So could you explain to us what is bond trading, especially from a retail investor's perspective?
Sure. Arjun, bonds are the most boring thing in the world, right? In fact, as a anecdote, James Bond, Ian Fleming, the character's so swashbuckling, martinis and everything. Why did he choose the surname as Bond?
Well, you tell me.
Well, he wanted to contrast it and pick the most boring thing in the world as the surname. So that's why it's James Bond, right? Now it is really a very boring thing. But if you look at all our wealth, right, most of the world are savers, right? Individuals save, and a lot of the actual exposure of our savings are in fixed income instruments, whether it's cash at a bank, whether it's cash yielding zero, or through a mutual fund or an insurance product. So bonds are the fundamental saving instrument for all of us. The problem is, if you're not wealthy enough, you cannot directly access it, and a lot of the yield gets shaven off, and you get something which is not the real thing, but a little less or a lot less than the real thing. So bonds are everywhere. Sometimes you don't directly see it.
So I think you bring out the concept of I use the word democratization, where you said if you aren't rich you don't get access, right? So let me ask you this question in another way, right? So why do you think bond trading isn't as popular among retail investors? Is it just because we don't understand them well enough? Is it because we don't have access because we don't meet the minimum threshold levels that qualify us? Is it because the returns are not exciting enough and high enough and volatile enough for it to feel like a James Bond? What's your take on the situation? Because you've been in this market for a while.
Yeah, I've been, my entire career in banking was spent in this market, and I've seen the market develop and grow. So the first, if you really feel that you need to democratize something, right? The way I look at it, and Arjun, you're a consultant, I'm just a fintech founder, right? So you are better with models and things, right? I think if we find that what do the wealthiest people in the world do, and if we find that they have a behavior that does not exist as wealth falls, i.e., there's a wealth effect, then you can say, hey, there's a chance of democratizing this. And in bonds, we absolutely see that. Find me any wealthy person in Asia, in the Middle East, and you'll find that they will have a direct bond portfolio of somewhere between 20 to 100% of their wealth. I've seen lots of wealthy people at 100% bonds, right?
Okay.
But if you find anyone in this part of the world with a liquid net worth of, let's say, less than $500,000, you will find zero ability to buy single ticket bonds, right? Now, in a joke which I'll not get into, but it's Larry Summers attributable, is that you basically, the punchline is you can be very smart and not wealthy. So anytime we say that, oh, the rich understand something but the poor don't, that's not something I buy. The Second World War was financed by the Liberty bonds, which were purchased by individuals. I'm the son of a Air Force officer, grew up in India. We bought national savings certificates, Indira Vikas, which were bonds, which were paper physical bonds. So
Hmm.
bonds are well understood. Government bonds are exceedingly well understood. There's no complication there. But it's some other reason which I guess you may want us to discuss that exists. So I just summarize: the rich buy bonds, but the not so rich can't.
Okay.
And that's
All right.
that's really the play that Bondblox is trying to change.
And I'm going to come to that because I guess my next question was going to be like, what is Bondbox's sort of mission and statement,
Sure,
and what are you trying to achieve? But can I ask a question
sure.
before that? Because you made an interesting point saying that you spent the bulk of your career, or the entirety of your career, in banking in this sort of
Yeah,
areas of bonds. If you were to sort of draw a 100,000 feet view, in the sense, in the last X number of years that you've
yeah.
been part of the industry, how have you seen the bond markets evolve from, I guess, an investor's perspective, if I take that perspective?
Sh- Uh, a great question, Arjun, because 20 years ago, 25 years ago, at the turn of the century, Asia used to issue like $5 billion of bonds, US dollar bonds, as a continent,
Okay.
right? Last year, we were close to 400 billion,
I was going to
right?
say that's a huge, yeah.
Right.
Okay.
And when I was a young analyst, we used to work on these things called Mission 2020. What would the world look like in 2020? Right. And I prepared a report for my bank, which I said this 4 billion will become 20 billion. And the big bosses laughed me off, saying, are you crazy? In 400 years, we've come to 4 billion. In the next 20 years, you expect us to gain 16. That's 400 billion.
So
Another,
what's catalyzed it?
the savings, the wealth effects, right? It's the amount of GDP growth, wealth that has happened. For a roadshow to raise money for as few as $200 million, we had to travel to New York and to Boston and London to raise money. Today, all these companies are here, but we have our own savings that allow us to catalyze this market. So bonds are big and rapidly
No,
growing.
so let me ask a question, right? And so maybe it sounds a foolish question. Is it just because the rich have become richer and the corporates have become bigger, so therefore the bond market has grown on the back of that demand? Or is it because more and more people who are the retailers, i.e., the people like, I guess, me, who are getting into the bond market indirectly? Or is it a bit of both? But that
But
would
but
be
that,
sort of
it's very unsatisfying answers to say it's a bit of everything. So let's
that's
let's
why I said, yeah,
let's peel
let's
both.
peel the,
Let's
let's,
peel. So let's, before we try and project my vision that, within the next 10 years, everyone who buys direct equities will buy direct bonds. Simple statement, right?
okay.
Let's look at how many people used to buy direct equities, right? 30 years ago, very few, but then Charles Schwab, etc., came and said, look, you can buy equities. Zerodha in India, a lot of online platforms came, and that
Hmm.
that 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 happened. FX was so hard to deal. I used to be a FX dealer at Citi. The only way you could trade FX by calling someone. Today, less than $100 million, you don't have to speak to anyone. We can all do TransferWise or Revolut or all these apps, online FX. So bonds are going the same way, right?
Okay.
And technology is driving the change, right? It is technology that is driving the change. The other slice, since we said we'll not do both, the other slice is wealth effects. As your per capita GDP of a country starts to grow above 1,000, 2,000, the subsistence part is taken care of, and then you start generating a big saving surplus. And that saving surplus, Asian save, goes into developing capital markets and investment products.
Okay. And bond blocks then.
Bond blocks.
What do
So,
you guys do?
so I was a banker. I used to raise money. I'd raise billions of dollars for people, but I'd never bought a bond myself.
Well,
Back
you're a good banker, right? You're a good banker. Sell what you don't buy. So there you go.
so about 10 years ago, there was a Tata Steel bond in Sing dollars that I had helped issue, called Abja. And I decided that let me buy some. So I got the necessary approvals, bought the bond through my banker, and the price I was getting was off by such a lot. It was like off by $6,000, and I'm like, I know what the price is, and they're like, no, no, you don't know anything. This is the way it is. And I was like, this got to be a better way. Why am I having to call so many people to buy a simple instrument? And that's what you know got me thinking that while the bond market has grown, our process is still phone based and you know based on Bloomberg. So that was prompted. I said there has to be a better way. I was turning 40 years of age, so there was some must do something, and that's what really prompted me. And what really drives us is transparency.
Okay, so let's take a step back. So when you said the price was off,
Yeah.
just talk to me about that. What do you mean the price was
Oh,
off?
sure. So in the bond market, because of market structure, in equities, Arjun, if you buy a Tesla share or an Nvidia share, uh, versus if a large asset manager buys, or you know, uneducated person buys, everyone gets the same price. But in the bond market, just like I'm Bengali, the fish market, the price you get is based on your expertise, your frequency of buying. So not everyone gets the same price in the bond market.
And why is that? Is that because it was just market practices and that's how it was accepted, or is there a more systemic reason on why bonds operate in a different way?
So it is, and nobody's really trying to rip people off. It's not that, but it's market structure. So the
Hmm.
bond market is not exchange traded. Bondblox is the
Hmm.
exchange, and we're trying to get it on. Therefore,
Okay,
it is bilateral trading. This bilateral trading necessitates that we set up counterparty lines, right? So you and I have to do KYC, set each other up. And then when we agree to do the trade, it settles 2 days later. So there's a lot of uncertainty. So not everyone can buy off everyone. And therefore, at the fringes of the market, the pricing is worse than at the core of the market.
fair
Because
enough.
think it's passing the parcel I buy from. And the equity market used to be pretty similar many years ago when sub brokers, sub brokers, etc. By the
Hmm.
time you reach the floor of the New York Stock Exchange, the price was better.
Hmm.
But the same stock, if you tried to buy it in Bombay, the price was very different.
Hmm.
So
No, you're right.
market structure,
I'm young enough to remember that.
market structure, right? So that's what we are trying to change, because
Okay.
today there are price aggregation. Bondblox has a big price aggregation engine. Settlement risk we've been able to remove, and technology. Fundamentally, the difference is technology, Arjun. Right?
So Rahul, I'm gonna. So I think So this is the time where I'm going to actually go a little bit deeper,
Sure.
right? Because I was looking around. We don't actually have many bond trading platforms or
Yeah.
apps, at
Yeah.
least in the Middle East, that I'm aware of,
Yeah.
right?
Yeah.
The access to the bond markets are provided through other platforms. I think robo advisors are giving you that access, et cetera,
Yeah.
right? Um, Talk to us a little bit about what is Bondbox, how is it structured. Try and use layman's
Sure.
language
Sure.
for
Sure.
fools like me, right? So how does the platform work? What are the key building blocks? We understand what you're trying to do. You're democratizing access for people like me, I'm assuming. And I'll have a few more questions, but why don't we actually start with what is Bondbox? How is it built? What does it do?
Sure. So we've been around for 8 years. We
Mm-hmm,
are licensed as a recognized market operator.
mm-hmm,
Think of it like a baby exchange or a specialized exchange that can do only a certain thing.
mm-hmm,
Uh, by the Monetary Authority of Singapore here,
mm-hmm,
we were in the sandbox, we tested, we got approved. Uh, what we do is we allow both individuals and institutions to trade on our platform,
mm-hmm,
right? Now, we never take principal risk. So, an order from an individual, Arjun, like yourself, will match or can match against any other individual or against a large financial institution. And this, in technical terms, is called an all to all trading model.
mm-hmm,
So, whoever has the best price, that matches against it. The other model is a bilateral trading, whoever's on the
mm-hmm,
other end of the phone. So
mm-hmm,
what this, and we custodize it. We have two custodians in the exchange, Citibank and Northern Trust. The cash
mm-hmm,
is kept with them. So it operates more like a classical equity exchange
mm-hmm,
with the depository and with cash settlement. And we take care of order routing, order matching statements, etc. But we are never
mm-hmm,
principal on the trade. So
mm-hmm,
our exchanges are known for only one real thing: best execution. Everyone gets the
mm-hmm,
same price transparently.
mm-hmm.
And that allows people like you and people from all over the world. The only people that we don't allow on the platform are US citizens for various reasons, can come and trade on this common venue globally using the power of an app. So a typical user journey: go to the app store, download Bondblox, KYC yourself, and we'll do it for you. Once you're set up, send money to the exchange, buy whichever bond you want. So that's the journey, and our pricing is really really good.
And that's what I was going to
Yeah,
come to. So how are you determining? So there's multiple questions I
yeah,
have, right? So forget the customer side of it. Let's talk about, if I may say, the supply side
yeah,
of this. So how are you curating what bonds are available,
yeah.
right? So you do some sort of curatorial services, or is there a supply side arrangement that you have with different providers to have their bonds on your platform?
You give us too much credit. You're right. Bonds are easily, if you're a proper institution, bonds are easily
Okay.
available, right? So there is no, except becoming a proper financial institution, which we are, there's no other criteria. So we can give bonds of any large company from anywhere in the world on the platform.
Yeah, but so you cover the entire fixed income securities
Yes,
span. So you have
yes.
government bonds,
We
you
have
have
government,
commercial papers,
whatever you want, right?
asset
Short-term
back. Okay,
T-bills.
okay. The reason I ask is because a number of the trading platforms
Yeah,
that we have here, right, equity trading platforms, they can't operate in certain markets because
yeah,
they are not,
yeah,
they're
yeah,
not allowed to offer stocks of particular markets.
yeah.
And that was the question I was going to ask, was that uh, in bonds, you it's easier. You're saying,
Yeah. So dollar bonds and hard currency bonds are, if the currency is capital controlled, it's easier. Arjun, I think I have bored people a lot with technology. So let me, take a sailing ship,
sure,
right, and talk about the origins of the bond market,
okay,
right? So guess where the bond market started?
no clue.
Exactly where I'm sitting. I'm sitting at Asia Square in Singapore,
Singapore.
which was water till a few years ago. So it
Hmm.
was in these waters in the Singapore Straits that the bond market started, 401 years ago,
Okay.
right? So we have a precise date.
Mhm.
Uh, we were in the world of bullion and physical currency, and there was yet another war in medieval Europe, and all coins went there. And the Dutch VOC, or the Dutch East Indies Company, issued the world's first bond, which said, I'll pay you, I think, 3.5% interest. And 2 years later, this can be converted back into its principal value. That was the world's first bond. And it was traded by, obviously, people in Singapore. It was traded by the British, the Dutch, the Indian traders, the Arab traders, the Chinese traders. So bonds from day one is a international market or a high seas market. You know, these
Yep.
words, when they say it's a high seas market, you're like, why is it high seas? Well, that's why it's high seas. So bonds are fundamentally international, right? Everyone in the world buys the US treasuries. Equities are fundamentally restricted to a country. You have the Bombay Stock Exchange or the New York Stock Exchange, right? They were started in cities, but then became country exchanges,
Excellent.
right?
Interesting.
So uh, in a normal day's work, right? Uh, when you pick up the phone to call your banker, that order may get routed to Zurich or Japan or London or New York based on the time of day. So the rules are slightly different than equities, for example. Sorry, long
No, I think it's
digression into
critical.
the
I think,
seas.
no, but it is interesting, right? Because to be honest with you, so I didn't know, I've known you, but I didn't know I could actually download your app
Please, please.
and trade and bond. No, I will definitely. I played around. So I obviously played around with your app in the sense that I was foolish enough not to put any money and try and trade because I
Yeah,
just assumed I couldn't,
yeah,
right? Because that's kind of the blocks we all have towards some of these trading
yeah,
platforms that, so on and so forth. You talked a little bit about pricing, right?
yeah,
And you talked about transparency. So talk to me a little bit about how do you, so you said the pricing is really good,
yeah.
right? What does that mean? How do you achieve that? And then the second point, early in the conversation, you said a lot of what you tend, well, a lot of what you're able to achieve with bond blocks is transparency. Talk to us a little bit about what that transparency means.
Sure. Let me tell you why our pricing is good, right?
Okay.
I explained to you that if it's a podcast, so I'd like the listeners to visualize, think concentric circles where the best prices are in the middle, and the further away you get of the circle, every layer, imagine the prices were worse off by 25 basis points, right? What technology allows us to do is get the individuals who are generally at the outermost periphery to, using bond blocks, have a shunt directly into the center. So if a classical bond trade in the old world passes through four sets of phone calls, with us there are no phone calls, right? That's how we make pricing transparency,
Sure. Okay.
right? And we are not a phone call either, and hence we don't have that 25 basis points. So it's not that at the core of the market I have friends who are giving me things cheaper, right? But it's just I can let you go, going back to Japan, and my Bengaliness makes most examples around fish. It's like you can go to the Shikiji market and buy your fish rather than buying it 1,000 miles away. So
Okay.
that's really the reason why uh, our pricing is good.
And efficiency.
Yeah,
And so you've been around for 8 years, right? So obviously you've come through a journey in itself, right? If I was to kind of ask you a very simple question from a fintech founder's
yeah,
perspective, what's been the big challenges, right? In terms, because I'm sure you're going to name a few, and then we're going to peel a few of those a bit further.
yeah.
So what have been the big challenges in terms of 8 years of being in function? How do you acquire customers, right? In the sense, it is not inexpensive, it is fairly expensive to acquire customers. I also wanted to talk a little bit about your business model, but we'll come
Sure.
to that in a second. So let's start with some of the challenges.
Well, it's quite, your questions are like, always have sublime A, sublime B, sublime C, right? I should bring out first. So
I
Well,
guess I've been doing it for too long, maybe. And thank God I'm not on the other side, right?
right. So what's how do we acquire customers? What's the hard
No,
part of being
I
a
say, what
fintech
have been your biggest
founder?
challenges over the 8 years? So let's start with that. So, what have been the big challenges?
Okay, I'm gonna be very brutally honest, right?
Hmm.
And I have uh, I gave a speech at the FinTech Festival for Elvandi, where you're a board member, that
Hmm.
founders speak, which I spoke about the journey. But I I'll give my perspective is this, right? The table stakes for being, surviving are that you are innovative, right? That's table stakes. So if you're not innovative enough, you die.
Hmm.
Then you have to deliver the innovation, right? So you have to say, I'll do this cool thing, and then you have to do it,
Hmm.
right? Once you've done it, I think in the large banking sector, people are still not willing to try it, right? It's like you stand in a street corner saying, please have my, have a Oreo cookie or have a Pringle. Look, this is a potato chip that's perfectly, made. And, people are not willing to try it, right? So that is about one of the hardest thing. And the larger the institution you speak to, the longer is the journey. We've spoken to institutions where we've had 300 meetings, of which every 6 months we have another first initial meeting, right? So it's like a test series, right? You like, India's playing Bangladesh today. So you're like, after 20 meetings, you're like, okay, sure, tell us how it is. And sometimes each meeting is better than the other, right? And as a founder, our purpose is not to have call reports and meetings. I did that as a banker, but you know, you want actual real traction.
So coming back to it, right? Over the last 8 years, right? No, sorry. So, the question is, why is it taking these large corporates who you're trying to sign up as arguably customers that long, right? You're a tried and tested platform. You're a founder who knows what he's talking about. You're solving a problem which is around, efficiency. To be honest with you, which then passes greater transparency and pricing. What's taking the corporates that long?
First of all, I will not, readily dish these large banks. Corporates are much faster, right?
Okay.
When I was global head at a bank, someone had launched an FX platform, and I said I'm not going to be part of that because many times the old way is very nice and profitable, but there are also concerns, Arjun, around the technology work. There's no one gets rewarded for innovation as much as they do for uh, something
Risk
going wrong,
management.
right? So that's why the it's there is Professor Raghuram Rajan wrote a beautiful paper, a very short one but really insightful. He said standardized assets get funded and financed. He said when you start a startup, you have to be innovative, and innovation is not financeable, right? And the process of regulation, VC funding, Series A, Series B is all towards standardization. So that is really the journey, right? And we are finding a real explosion in people who are using us today rather than 4 years ago. So it gets better with time, but you have to be able to survive 5 to 10 years.
And from a business model perspective, right? You operate both direct to customer, direct to
Yeah,
consumer,
yeah.
and are you also integrating with other third party platforms who take your capability to the market?
Yes, we do. Yes, we do. So
Uh,
originally we started, Arjun, with exclusively the B2B2C.
okay,
And then as these 300 meeting journeys were taking place, including in that journey 10 first meetings interspersed after every 50 meetings, uh, we had developed a large uh, following for our information service of bonds.
sure.
And these people came and said, why don't you allow us to trade? And we said, no, no, we'd prefer you come through the bank. That's what the banks have told us. They said, look,
Hmm.
we'd be happy to onboard directly. And a regulator had permitted us to do that. So we opened up the consumer channel. Uh, and that has done really well.
And that's interesting. So in a lot of business, I've seen that the consumer channel, the direct to customer channel, tends to become like a showroom,
Yeah,
right? It's where it's like your sandbox for
yeah,
trying and testing new things,
yeah,
but the core business continues to remain B2B2C.
yeah.
But in your case, you're saying actually the B2C business is actually doing incredibly well on its own.
Yes.
It's growing at a rapid rate, and you haven't had to go through those crazy amounts of throwing money left, right, and center to onboard new customers, because typically that's where, if you see all the equity trading apps,
Yeah,
right, they've spent endless
yeah,
dollars
yeah,
just to
yeah,
get
yeah, yeah,
consumers
yeah,
who are not loyal at all, because the next trading app comes in with
yeah,
some sort of a slightly different angle,
yeah,
or a slightly profoundly different angle, and then they switch. But come, so let me try and converge a couple of trends. We in the Middle East are actually seeing, I guess, the emergence of Robo,
yeah,
right? So wealth management, if I may use that term here, okay, and bond is part of your wealth
yeah,
management,
yeah,
right?
yeah,
Has been has been something which you've only talked about if you're rich and old,
yeah,
if I may use it, or rich and or old, okay,
yeah,
because there's been this view that only the old people are rich. Obviously, that is changing, right? There are lots of young, wealthy people who are much more digitally savvy. They don't necessarily want the red carpet treatment. They want something which is here, now, immediate. So, Robo is being talked about a lot in the Middle East. A number of large capital markets players are either launching their own robos or building platforms with which will then offer their robo and trading services through third party platforms. Question: has the growth in the robo, which has been a global trend,
yeah.
right, and it's been okay, let's be honest, it has done it's made enough of a dent in the market that we recognize it, has that been positive for the bond market? Has that accelerated interest? Has it accelerated um, dollars? Or do you think, again, those guys are very heavily skewed towards the equity side of the world? How do you see that play out?
I think uh, the reason I'm struggling is because I want to say two different things. You again asked me two questions, Arjun. Right? Next time, please one at a time.
Okay.
I'm in serial mode, not in right. So the first question you asked me was, "Is robos a nice? Is it good? It's a trend." Absolutely. Actually, um, did my doctorate, and the context was robo advisors. It was on the role of trust in advice acceptance, but
Okay.
the context that I used for the surveys was robo advisors. So I
Okay.
think robo advisors are a fantastic thing, right? The reason they're fantastic is to invest properly, Arjun, you need one of four things. Either you need experience that you've invested before, or you need an advisor, right? Or you need education, right? uh, and these three things are all you only get if you have money. So I call this the club of the wealthy. If you are wealthy, you'll get an advisor, you'll have experience. So the only way out of this is through either technology, i.e. robo advisors, or through education and early education of finance. So robo advisors have a societal benefit, right? Now, do are they making a dent in the corporate bond market? No, we are so large, right? Uh, we the numbers are super massive. The
Mhm.
other thing is, and intellectually very easy to understand, if the US government is paying 5%, the Fed cut last night, right? If they're giving 5%, what is the most efficient way for you to get that 5%? Is it directly buy that 5% treasury bill, or to have three, four, five intermediaries sit between you and that?
Obviously, the former.
Obviously, so the only risk-free asset in US dollars is the T-bill.
Hmm.
So that's really, but to understand that you can buy the T-bill needs either wealth or experience or an advisor. So the trends are overlapping. Uh, but most people did not have any access to investments that robo advisors are now providing. So I think they're a great uh, new innovation.
Okay. So we've alluded to fintech and technology and how that's actually playing an interesting role, breaking down I guess, the club of the rich. I don't know
yeah,
if those were the words you
yeah,
used, right? Let's talk more generally in the sense that how do you see the evolution of the bond trading market and technology, right? So it's come a long way.
yeah,
Obviously, there are players like you, but I guess we're still, if as they say, we've only built 1%.
yeah,
Um, how do you see technology continue to play a greater role in terms of democratizing access, knowledge, uh, uh, intelligence, advice?
yeah,
Because again, not that I'm asking two questions, I'm just making a statement. One of the interesting things that I have seen in Robo is that 10 years ago, whenever it started, they were purely digital,
yeah,
right? And then I think a lot of these robo advisors actually realized that after a certain wealth level of investment, people felt that they needed some human touch, right? Either because it was getting more complex or it was getting higher. So they went phygital, if you
yeah,
may say, right? So there's someone at the end of a phone line, or whether it's in person and so on and so forth. And I've experienced it myself
yeah.
as I've got onto robo platforms. So coming back to it, how do you see technology playing a greater role in the way the bond market evolves?
Um, a great question. So the field that studies this is called, of tech adoption. And in financial services, so in technology, any technology like iPhones, etc., there are only two factors that matter: usefulness and ease of use. But as we come into financial services, trust starts to play a role. And what we found is that the relationships are non-linear, but they do a U-turn. So at very low wealth levels, you're very happy to do uh, direct robo, not phygital but digital.
Yep.
At intermediate levels, you start to say, "Hey, I wish there was a person."
Hmm.
But when expertise or experience increases further, you go back to digital. you
Interesting.
you no longer need anyone to come and tell you that, buy this, buy that. So the effects are not linear. They go up and then they go all the way back down. So at very high levels of expertise or experience, you want it to be pure digital. And the reason you're not seeing that, because no one's putting $2 million with the robo advisor. But in our platform, when we see a lot of large clients, they love it because they're like, "Look, I know the price, I know what button to click, and I'd like it."
And
But
those are consumers you're talking about,
consumers, yeah,
customers?
yeah, yeah,
Yeah,
consumers,
yeah.
right?
Okay.
Consumers buy a lot of bonds. They buy big bonds, and uh, they know
No, I
exactly what
know
they're
they do,
getting.
but off your off
Yeah,
your
yeah,
off your
of my
platform. So
platform today,
right. Okay.
including from the Middle East.
Yeah.
They
Okay.
seem to like our offering a lot. Uh, so I just wanted to make that thing that we should not assume that uh, at higher wealth people always want phygital. At very
Okay.
high levels of wealth uh, or expertise, I say, so it's not wealth that makes it; it's experience and expertise.
So Rahul, let me ask you an obvious question, and maybe your answer will be, Arjun, you just don't know, and therefore
I'll
it's a
never
stupid
have that
question.
answer, Arjun. You know that. You've asked me 4 times, right?
No, no, but so
Yeah,
you made a very interesting point that people are trading substantial volumes or values, right, in the bond market. You've obviously talked about, and including people from the Middle East. Why are not more of the wealth management, asset management players in this market
yeah,
currently
yeah,
offering your platforms
yeah.
in some form or the other, either a white label or a relationship directly to their customers? So,
Um,
so
I,
I'm not seeing any evidence. Maybe you'll correct me.
Uh, no, I think the I think our marketing has not been as good in the Middle East. I don't have an office there. I don't have a presence there. I
But
should
there
have.
should be some competition, right? There
Oh,
are
that I
others
can
who.
tell you, that
Okay.
competition. But bond maths is hard.
Okay.
As if for those of the listeners who did the MBA or any sort of finance, equities was fun, M&A was fun, but bond maths, that convexity and those formulas was hard. To
Hmm.
calculate yield from a price is hard, right?
Hmm.
To calculate holiday convention, it's not easy.
Hmm.
So when I used to go to a lot of fintech festivals in the early formative years of our company, including the
Hmm.
first fintech festival, tokenization, and people would say we do all asset classes. And I'd get very scared. Why am I doing this? Everyone's doing it. And I'd go and ask people, what do you do? They're like, all asset classes. Do you do bonds? They said, no, we don't do bonds. R- Right. Because paying coupons, and that's one of the reasons bonds are not electronic, is you have to pay coupons, you have to calculate this clean price, dirty price, etc. But once you solve it, things scale very rapidly. And happy to report, sir, lots of people in the Middle East are now talking to us and at various points of onboarding,
Yeah, that's good to know. That's
right?
good to know. And because we, if I was just to wear my consulting hat, one
Yeah,
of the areas I tend to consult quite heavily, as a matter of fact, both my firm's level, is actually in this whole space of wealth and asset management,
yeah.
right? I myself, by no stretch of the imagination, am an expert around bonds, as you can see from the questions
Yeah.
that I'm posing. But it's good to see that. So we're not seeing the evidence, but obviously you're starting to see the
The
conversations
pipeline
kicking
is
off, and I
there.
think that's
It's
quite
we,
healthy.
we are well into the 300th meeting.
Right. Well, we might need to have a separate discussion
Sure,
on that.
sure.
So cognizant of time, um, how do you see the bond market then evolving over the next sort of 5 to 10 years? Right. What sort of new opportunities do you see emerging? What's going to be the heavily disruptive stuff just beyond just technology?
I think one bonds, if the Fed cut rates yesterday, so it's very topical. I don't know if you knew it'll happen when you scheduled this, but yes, so it's big news. You
Well,
know,
I think we were all expecting the rate cut, to be honest
yeah,
with you,
uh,
but no, we didn't time this call particularly. I didn't sort of get on a call and said, "Let's get Rahul on the call right now." But yeah, let's talk about that a little bit, right? I think we can go. It's a separate segue, but keen to hear your views,
no,
and then we can take a slightly longer
the, the,
perspective too.
I think bonds will do well. If I don't give advice as an exchange, but a lot of the advisors, if you read, they're saying, look, go into bonds. The yields are good. You can easily make 5% on dollar bonds for investment grade names. There's so we see that trend. Uh, the second trend we see, which I Arjun, maybe this is your area of expertise. Suddenly, if you have $4.99 million of net worth, you're not rich enough to have a private banking account.
Hmm.
So that goal of what it takes to have a private banker pick up your phone keeps going up and up and up. And there are people stuck with 4.99 who are like, I used to buy bonds. How do I buy bonds today?
Hmm.
I'm
Hmm.
also finding there is a situational normality in self directed investments that started with equities,
Hmm.
moved to funds. People are doing FX and now starting to do bonds.
Hmm.
People are saying, look, I think I can read enough. I can listen to blogs. I can read a little bit. I can attend online courses, figure this out, and take control of my own destiny.
Interesting. And sorry, go ahead.
No, no, I'm saying so. I do see this trend continuing for a rather long period of time.
Okay, so I have a question for you on that, and I think this is a question that just generally lies, right? So we're working with somebody, we're building their robo advisory
Yeah,
platform,
yeah,
right? And I think what we're realizing is that education and awareness is woefully low,
yeah.
right? And just a second to that, very recently we had a big event in Riyadh called 24
I know, I
FinTech.
know.
Prior to that, the day there was a big roundtable which I had the opportunity to facilitate. We had the who's who from
Yeah,
the world of the capital markets in there, including regulators and so on and so forth. One common theme which came across the entire room was there's lack of awareness and lack of education,
yeah,
right? And that to me gets amplified when you start talking about things like FX and bonds,
yeah,
right? So the further away you get, as you said very correctly, equities, more awareness, right? I think there's a little bit of a, if I may use that term, a gambling feel to it too,
yeah, yeah,
right? Everybody feels that they're smarter
yeah,
than, and they're all buying Nvidia when they should be selling it. They're all selling Nvidia when they should be buying it. But we all feel we're super smart.
yeah,
Okay, then you have this whole crypto thing going on, which we keep reading about. People are, people keep buying these meme coins and stuff and stuff. In any case, that's beyond mine, my capability. You then come into this funds world, but I think that the education level is there. funds, ETFs, so on and so forth. But as you get further, if I may say, to the right or the left, whichever way you're seeing it, right, the knowledge and the education level drops. How do you, I don't want to use this term, but how do you dumb down the education so that more and more people can actually understand FX trading, can understand bond
Yeah.
trading? So even though they have access, which you're doing a great job by
Yeah.
providing, you're still not going to get an Arjun on it because he just kind of feels like, it's just easier to go buy a, a digital gold bond, a digital gold paper,
Yeah.
and stick with it. So,
Yeah.
so what's going to happen there, and who's going to catalyze that change?
So I want to be part of that change. So,
Okay.
I teach regularly. We send out a newsletter, which is how, so we don't advertise, we just send out a newsletter which talks about, what's happening in the bond market. We do webinars. We've trained 1,200 bankers. But two other anecdotes, and, at some stage, I think we'll run out of time before the bonds mature. The podcast has to end. So, two other things. One, Arjun, I went to this bookshop called Kinokuniya. Obviously, it's a very big one
Yeah.
in Dubai. And I went with my daughter, and I decided to go to the finance investing section.
Hmm.
6 rows, 8 shelves, let's say 5,000 books. How many on bonds? I counted and took photographs.
I
Three,
don't know. Yeah, that's what I
three,
said. I'm like, if one.
three.
Yeah.
What is the asset allocation to bonds in the world? 50%,
Yeah. But
right? How
yeah.
many books on fintech? Ronit's book was there, and then we had Varun Mittal's book. So,
Yeah.
I'm like, I was telling my daughter there are 3 books on my industry and 2 books in which I have, a few pages. I'm like, this is not on, right? So bonds are simple. One of the reasons bonds are not explained and taught very popularly, because if you buy a treasury bond through Bondblox, the total fees you pay is 3 basis points, 5 basis points. Sorry, 5 basis points
Mm.
is what you pay. Now, nobody wants to spend money in education if the price is 5 basis points. An agent or a broker says, why should I educate that? Let me try and educate people on private assets, which is like the holy grail these days, where
Mm.
I can
Mm-hmm.
make 5% fees,
Mm.
right? So
Mm.
there is something, and it's very hard. It's my life's passion, and I don't think writing a book is going to solve it.
No, I
maybe
don't think a book.
maybe Ian
We don't need
Fleming
it.
should
Yeah.
have written a book
Yeah, yeah,
without the
we're not.
gems.
We're not trying to plug Ronit's book here, but I don't think we need another book. I think and to be honest, we don't need another newsletter. I have one too.
Yeah.
I think we'll have to find more creative ways of doing
Yeah.
it. I'm cognizant of running out of time. Last question,
Sure,
please.
sure.
What's next for Bondblox?
I think I have my mission is that everyone who buys equity should buy bonds. And if in the next many years that dream can be achieved, I'll be happy. If Bondblox is a large part of the dream, I'll be slightly happier. If I'm smaller part, I'll be also happy, because it is a societal good to connect borrowers to end investors, right? And the bond market should focus, and it correctly does, mostly on the highest quality issuers, right? If every citizen of the world can buy his government's bonds, right, it's so much nicer for him. If you stay in a country, your government's bonds are AAA rated. So that mission is one that lets you invest years and years of your life in, right? And that's really, really what's driving me, driving us, driving our company.
But there's one last point, and I guess
Yeah,
leave this thought with you. I think, with all due respect, we'll need quite a few more bond bloxes,
yeah, yeah,
right?
yeah, yeah,
And the old adage goes, and my grandfather used to tell me, he was a businessman, he said that he actually helped his competitors
yeah,
come up the curve, because he said, for me to be able to create a market, I'm never going to be able to create it
yeah,
myself.
yeah,
At least if I, through other people, will grow the market,
yeah,
and as long as the market is growing faster, then I can grow it myself. Then it's down to me achieving a greater market share by
yeah,
being competitive and better. So I think that's one of the challenges you have as pioneers in
yeah,
the space that you're in, which you've obviously explained is quite complex. Is how do you incubate these competitors, right?
Yeah.
Because at the end of the day,
So
sharing is caring in this case.
Arjun, your grandfather should have got award, because about 20 years later ago, an IIM Ahmedabad professor wrote a paper that got published, which exactly said categories grow when lots of players jump in.
Hmm.
So
Hmm.
what I'm trying to do, and if please help me, to any government that wants my technology, I am happy to give it to them for free. They
Hmm.
come to the fintech fest. I said, sir, I'll give it to you for free. I'll help you implement. You please take the technology, make it go in your local market. But
Perfect.
I'm very, very happy, to give it for just so that this infrastructure becomes available.
And that's essential. Rahul, I'm conscious you have another call, and thank you for taking your time. And I know it's late in Singapore, so appreciate you coming in. I'm fairly certain. Well, I'm a little bit smarter than I did before we started, and you gave me a couple of interesting quotes, which I mean I will go and dig around. And I'll read about it. I'm sure we'll see each other in, I guess, less than 30-35 days in
Yes.
Singapore.
Yes.
I'll be there for part of the Singapore FinTech Festival. So thank you.
Thank you, Arjun. Real pleasure, and really nice chatting with you about this boring industry.
No, no, it's not boring, my friend. It's important, as they say. You know, the utterly boring is utterly important in my world, right? With that, ladies and gentlemen, I'd like to thank Rahul, who is who's the founder and CEO of Bondblox. You've heard a lot about Bondblox. Do watch this episode. I will do a few more write-ups on it, and I actually am going to connect with him on his newsletter and see if there's a possible opportunity to bring Couchonomics' newsletter and what he does together, so that at least in the Middle East we can start spreading some of the knowledge. With that, I'll say goodbye and thank you, and I'll see you guys next week. Bye bye.